Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
So my name is Steve Vetterl on the mic. Today's the 11th of May. Let's take a look at the chat window, which is now open. All questions, if you could please post in the Q&A window, which is now open. I have the proverbial stuck on a client call, so I am late to our discussion today. So let's talk a little about Forex Factory. I chatted at length on this on Saturday. If you are new or just watching this recording, I highly suggest you take a look at my Telegram channel and or the discussion I had on Saturday. So I went in depth on a lot of charts about technical analysis and so forth. If you are not subscribed to the Telegram channel and you need a link, let me know. I can pop out the master links. At the very minimum, I recommend all subscribers be connected to the software or the group of softwares that you are dealing with. In some cases, we have folks with 4 different pieces of software, the Platinum Access Pass, in which case you'd want to follow all developers on Telegram and the chat rooms associated with those groups. In addition to the Auvoria Prime main channel and my channel Market Watch as well. So I've posted within a lot of the chat groups an actual link to my channel. I think I've done somewhat of a half-assed job of trying to get subscribers to my channel, which means essentially I failed some subscribers from a risk management standpoint, right? So I've really begun to put the push out to get everybody switched over from the old channel, which we did not have control over, to the new channel, which I have full control over. So it's Market Watch with yours truly. Let's go into the market. Now, over the course of the last couple of days, there's been a pretty big correction in equity land. There has been a lot of chatter coming up around inflation. No surprise if you guys just take a look at one of my favorite. This is the FinViz, and I just click on futures markets. This is let me see if I can make this a little bigger for you guys. Can you guys see the screen okay? Hopefully you're hearing me okay. Great thing I like about this screen is it's a dashboard to everything that's going on globally. And obviously you have your currencies at the bottom. If you hover over to give you a chart, don't worry about 5 minutes, focus more on daily charts with a lot of this stuff. But these are just quotes. If you go back and look and just click on futures, click on daily, you could see the charts, like what's doing well versus what's not, okay, versus just the actual charts themselves. You know, just looking at daily or weekly, just focus on the big picture and stuff. You can actually break these down by sector. You have indices at the top across all developed markets. Then you start to get into commodities. You have a row of essentially gas, oil, ethanol. Got the gold and silver, which both been breaking out, by the way. Same thing here. But then you begin to see crazy stuff. And why does this matter? When you're seeing crazy stuff like what's going on with lumber, and look at this chart. I mean, it's just bananas. Look at the weekly chart on lumber. Now I'm going to go back to monthly. So this is the entire history on lumber. Now, this isn't really actively traded on the CME and or FinViz doesn't have data back to this, but look what's going on with the lumber markets. Essentially, you crossed over 600, and this is per 110,000 board feet, which is a single lot in futures land. But the I mean, what this illustrates is that inflation in terms of commodity prices, and a lot of this is related to housing in the US and some other factors, but this is what you call parabolic, right? And if we're on a monthly chart or even a weekly chart, now this is probably going to be an island reversal for us in the lumber area. Well, why does this matter for currencies? It's because inflation's starting to creep its head into a lot of different markets. Copper is another big one. Now, as what they call Dr. Copper goes, so goes the market. So I would encourage you guys, just keep a quick, you can just click on futures. You can look at daily charts. You can look at the performance charts, the quotes, whatever you want. Just be able to see the correlations between what's going on, right? How does bonds, don't pay as much attention to the 5 and 2 year, but pay more attention to the 30 and 10 year in any of the developed markets, whether it be the bonds in Germany or, some of the different bond markets around, in addition to the treasuries, and how their correlations to currencies have played out. Because all of this has continued to do is have the dollar in more of its downward path. So looking at news, obviously we've got Governor Bailey speaking earlier this morning. I'll take a closer look at currencies. I actually have not looked at them too much because I'm stuck in client calls most of the day. But we do have news events this week, so just be aware of this. This always shows up in the notes I have in the back office as well. All right, so start off with the dollar. I'm going to get too much into the other stuff. Again, we're looking for this to go back down to the 89 area, possibly crack below this and continues more south. All this really means is that anything related to the dollar of a major that's traded out there, more than likely as the weakness continues with the dollar, it's going to be strength for most other stuff, probably with the exception of the yen. What's that mean? You're more inclined to want to accept long trades in these currencies, right? If the dollar's going down. Just keep that as sort of a broad theme. If you're new to this, I have on my Telegram channel a substantial amount of technical analysis, including the whole 162, I forget, 162, 132, I forget what it is, page book on full candlestick analysis with all chart patterns. So there's a ton of research, I think, that should always be started from a trader standpoint and understanding the relationship of a group of candles to a previous group, right? Tops, bottoms, neutral, bullish, bearish, all different types of factors that would play out. So that when I'm talking about this, it doesn't seem like hieroglyphics to you guys. You're kind of on board with what I'm ripping through. So long term, let's take a look at the weekly. Let's go out to the monthly on the dollar. Now, it's been many years since we've been in this upper zone. See, I'm circling this with my crosshairs here. See that? This is all the upper zone that we're in, that we essentially blasted up into after that big event in 15 took place. So this whole area, if you will, or the first stop of this area is that 85 that I'm targeting. Ultimately, we could be as low as 78, which I really think would have some fairly profound effects on global trade and money supply that could certainly roil the currency markets around with it. But I can't tell when we're going to move into this area, so just be aware of that from a longer term perspective. I always start by looking at daily charts first. So Euro USD is obviously almost a perfect inverse correlation to the previous DXY, which is just the dollar index chart. Talked a lot about this, so I'm just going to glaze through these real quick. Still in an upper zone. So with the Nightingale, that's funny. With the martingale types of systems that the software trades, the fact that we're inside a range and bouncing between a particular group, that type of trading system can thrive in this environment, right? Doesn't mean it always will, but feel comfortable that it has a higher win rate in this type of environment. Yeah, so getting a whole bunch of requests for the channel. So let me just pull up The channel. So this is the master list here. You know, the interesting thing about this master list is they used to have, here, I'll just give you guys the link. I don't know why, maybe somebody in compliance can answer this one, but here's the link to the master channel list. They used to have all of the chat room links in here too, and now they don't have that. I don't know why that is. Never understood that. But you can go to the main channel, and like in the case of Neo, you know, Fernando has a link in the main Neo channel to the actual chat or with Killian and Stratum and so forth. So back to your USD. So you can see since essentially July, we've been in this upper zone. I would expect to continue to be in this zone, but with the tendency, if you will, to probably go up and test this upper area, this whole 23.33 area, in my opinion. Euro GBP still in a tight zone. So it's been a little more predictable than most. CAD JPY. Let's take a look at that request. So whenever you see, you know, something that's just gotten really extended out of a very broad base, which was a stepped up base, you have to look back at the weekly chart. Okay. So this is where the magnet is, in my opinion. And what did I mean by that? It means that I think price can have a magnetism, if you will, or a draw up to this whole 91.40 area. Now I know for a lot of you asking questions about this pair is it's usually along the theme of my software probably shouldn't have been taking shorts on the way up, right? But I just, you know, blindly approved because I wasn't sure of, you know, its path. But it's very easy to chart this currency pair. You can see just by looking at these are weekly charts. Each candle represents a single week. But notice when we've broken out, you've had an extension, right? Or when we've broken down, it's moved to the next area. So it's very easy to see, and I don't think it really requires any technical analysis expertise, that if the strengthening of the Canadian dollar, which has been pretty good in relation to most currencies, especially against the yen, you know, continues to get stronger, we get up towards this area. Unfortunately, if we move to there fairly quickly, we'd be very stretched from, you know, a Sigma or a any type of Bollinger Band or Keltner channels, which just does nothing more than measure the what I like to call the rubber bandness of a move, right? We've blasted through many of these areas from a resistance standpoint. Just think of, and I try not to put this on the charts because it confuses people, but anytime a market moves in a particular direction, it gets stretched. Most markets out there, with the exception of a few in commodities land, are more of what's called a mean reverting market. That means when it gets stretched outside of a particular move, the rubber band gets super stretched, it's going to want to snap back, right? It's going to want to revert to the mean, and that we did, right? So we traded back a little bit, but again, the fact that this reversed, finished towards the higher part, right? Would have had me personally with NAV versions of this software, I would not have been accepting trades up here. Now, if you have more of the automated versions, you don't really have a choice. You can choose, you know, not to trade this pair, turn it off, move to something else. A lot of the questions I get a lot follow into the same theme. Hey, Steve, what pairs do you like? And I've told everybody, and I will continue to always default to each of the developers for the answers to that. Why? Because they're much more in tune to what their software. Many of them have a fairly sophisticated system called Quant Analyzer that they use to backtest and or see how trading's done on either periods of time. But they, with that system, it's much easier for them, plus on the time, to learn what currency pairs are going the best, right? And in the case of two of our softwares, they both primarily trade a single currency pair, primarily, meaning it can take other trades. Occasionally you'll see some, but they usually just trade a single currency pair, which makes it easier from the standpoint of being a subscriber. The problem with that, if you're just talking about just a general risk management or diversification discussion, you have a lot less, you have a lot more what they call single currency risk if you're just trading one pair. So that it certainly argues if you can afford it or just bring some more people into the organization, help pay for it, having at least two pieces of software trade, I think ideally in a perfect world, I'd want to trade manually with Arrow, right? That provides a diversification, different currencies to trade there. Now outside of that, have like a Neo or a Stratamus, which is mostly single currency focused as far as their strategy. And then maybe have like a Gearbox fourth piece of the strategy or a variable, trading a much more broad group of pairs. That's JPY. Let's take a look at the JPY AUD. Where is it? I'm missing something here. Must have gotten deleted. All right, so start off the daily chart as far as Aussie again. Now this is interesting. I haven't looked at this in a while. Do note the strength of this country's underlying currency in relation to most. The charts look like this, which is pretty good, right? So you already know that it's been strengthening, right? So you're already less likely, just from a long-term perspective, to want to be on a lot of shorts, right? Because as soon as it has a particular pattern, notice it broke from the pattern, came back down and tested the top of this area, which is this line, which ideally should be extended, right? And it's continued to lift. We break out, may have a test back down against it, right? So now we've been in, sort of NAV mode, if you will, over, what's this period of time? End of February to now. Notice each time it's poked its head above this resistance line, it's come right back down inside it. More times we attempt to go up against this, the higher the chance that it's going to break. If this breaks above this line and we close above it, I would not be accepting any shorts for a period of time. Week, 2 weeks, whatever, it's probably going to rip. And let's go to the weekly chart to see for where we'd go. So notice this whole 89 area, 89.10, 15.20, essentially all the way up to like 89.70 is probably more than likely the next area will trade to, if we can decisively break out. I've switched to a weekly chart, so each of these candles represents a single week. Whereas if you look at the monthly, maybe it puts it a little more in perspective. But again, that whole 89 area seems like, to me, the next zone, if we break and hold, that we could trade to. The other thing to note is when you're looking on a monthly chart, higher time frame, more solid patterns as far as support and resistance, right? Notice where we are. We're up against a lot of resistance on what they call a confluence of resistance, meaning lots of different things show up in one spot, right? Support and resistance down here. But look at this, we're coming up against arguably a cross in the long term, both 100 and 200-day moving average lines, along with long-term resistance area. So if we break above this and hold above it, this is the doji candle last month, which is indecision. Now we're lifting a little bit above it. There's a good chance that we'll probably break above this, and then you have this 89. It's literally like almost a full $0.50 zone here that we're going to be headed towards. In which case, I'm just much more not interested in accepting any short that gets thrown into my acceptance level for this particular currency pair. All right, what else? USD CAD, back to the daily. We broke below this, so obviously the dollar's been weak, no surprise, right? So let's go to the weekly chart on this one. We're basically at long-term support. So let's go to monthly now. We're at it. I mean, we're on the edge of the cliff here. I would say that probably going to be going as long as we clear this 19 area. I wouldn't be accepting any long trades underneath this, especially if you see more than a couple of days close underneath that area. So a lot of people just in institutional land, and here I'll show you an example of this. It's tons of teaching examples everywhere, but don't worry as much about price. Just worry about the patterns I'm going to talk about here. So we had a long-term support at this whole 2300 area, right? This whole zone. Notice we kept coming up against it. Remember, each of these is daily candles, right? So a lot can be proven by multiple tests and or a peak above this area that was rejected. So knowing this, seeing these two indecision doji days, I'm already looking for a big candle down at some point, and boom, you got it, right? So I just wouldn't be accepting trades, right? Now, this is one of the few times, especially on these solid pattern breaks, that I am trying to teach you guys to be smarter than the software. Because I think in many of these cases, the software is thinking just a little too short term, and or it does not have a trend-based ability to morph. If it does, you're not as caught up in accepting this versus that. But if you have 3 or 4 currencies and hey, trading one of the majors here, damn thing's ready to break lower. No surprise, dollar's been weak, Canadian has been strong. I don't want to be in front of this. I don't want to step in front of the freight train. This is where I think a lot of martingale-based systems, which is essentially just taking a sequence of more and more larger and larger trades, knowing that it's going to snap back and come back up. But in some cases, it doesn't snap back up fast enough. You're in drawdown, waiting for it to come back. This can be the case with any currency, this particular chart pattern, right? But it is getting stretched. So if I had Keltner channels or Bollinger Bands, you'd see that they're probably running like right through here where my cross area is. And we're past that stretch point. Doesn't mean currencies could be continually more stretched, right? I mean, damn thing get down to 119 and it'd be super stretched, right? And then a martingale system where if it's just automatically taking trades, it hasn't morphed into a trend down, right? In which case it's much more likely to take shorts as we rally back. Hopefully that answers some of the questions I just got. And this is tough there. I mean, I don't expect, and one thing I always told students in the past is, sort of let your hearts not be troubled about this. Enough time spent in front of this, or just, listening to me drone on about this subject, just by osmosis, you guys will begin to absorb this information and it will become more mechanical. And that's really my goal for this, because if I can get you guys all mechanically thinking on every one of these things, you will be much more risk management oriented. Euro CAD daily, getting ready to crack below this as well. Just let me reset scale. Weekly chart, you can see where this thing's headed down, this area, in my opinion. I think that answers all my questions. CAD CHF, back to daily. Getting the range. We're talking a lot about this. Has been a good teaching example for me of breaking out of the pattern, testing against the upper range of that pattern, and then just continuing to rip, right? Not a place I would be accepting shorts for many, many days. Now, if we got super stretched, which we were right at this 72.50-ish area, maybe you could have accepted some shorts just short term because we're really, really advanced and we need a little bit of a pullback to get towards that mean thing I talk a lot about statistically speaking, but it's eventually just going to launch higher. It's not like we didn't see this among many currency pairs, right? I mean, this is a great example somebody asked about. I could go back to this as to why. See, a retesting with indecisions the next day is typically going to be a push higher into that area. 80 CAD. It's been no surprise in a large range because both these countries' currencies have been strong. So really not much headway, if you will, battling out among two of the stronger guys currently. Let's see, GBP, NZD, still tight range. Kind of surprising, usually this currency just has a tendency longer term to really just occasionally just act all crazy, like we saw back here. It's been pretty quiet. NZD CAD. This one sort of bucked the trend of stronger currencies against Canadian. This has been the opposite. Gold. Remember that spot break I talked about? We've broken out of that. Now we got to get past the congestion potentially to go higher. But I mean, it did a good job of basing. Cup with handle breakout right here at roughly 1800. Hasn't really advanced much of beyond that because there's a lot of congestion long term of other stuff that needs to play out, which should play out to a higher move up into this 1950 area. The dollar continues to weaken. Right. What else? I think that's pretty much everything I wanted to cover, guys. So I'll just have it at that. Continue to get as many people as you can internationally to Orlando at the end of July. You guys will see my fat ass up on stage speaking as well, talking about risk management, continuing to push the conversation further. So with that in mind, I will wish everybody a great week. Stay kind, be nice, and may the trades be with you.